Hello there, traders. Hello there. Good afternoon. Good afternoon. Welcome to Paul's Monday Market Update, number 224 for the Monday, the 11th of May, 2026. I hope you're all well. Hope you've had a good weekend. Hope you are ready for another interesting and eventful week in markets. As always, that has been the story of 2026. Just a quick bit of housekeeping. This will be the last one for a couple of weeks. Okay, we'll be taking a 2-week break. I'm away and traveling, and we'll be back on Monday, 1st of June. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 odd minutes as we take a look at strength and weakness within the FX and indices and commodities markets, look at a few charts of interest, and then take a look at the live markets. It is not a signal service. It is not trade recommendations. It is just me sharing what I'm looking at, which may be of interest to you, and you might want to add it to your own watch list. As always, you are always very welcome here, but just remember that you are always responsible for your own trading decisions. And for those of you who need a little bit more discipline, accountability, and consistency and structure in your trading, you can join the VTP Trader Accountability Group. The tag is all about helping you build that discipline, accountability, and consistency. You can ping me on my mail, or you can use that QR code, or use the bit.ly code if you want a few more details. Okay, next, this is Gilt, UK Gilt 10-year yield. Okay, yield and 10-year Gilt. So once again, as always, it's the this is the weekly chart. Okay, and there's a couple of things here on this. So bang, I'm just gonna zoom us out a little bit. And the reason is that back here, okay, 2022 August, sort of into August, July, August, September 2022. What we saw was, you can see the absolute acceleration there, okay, of the yield of the Gilt 10-year. And a lot of that was driven by the supposed Trussonomics, okay? Truss and her Chancellor, Kwasi Kwarteng, their sort of emergency budget pushed up those gilt years. There are people far smarter and wiser than me that would say that there was a whole host of other matters that basically had an implication upon that. Okay, but the damage was done. It was enough to rock sentiment, and it was enough to basically to end the sort of the Truss premiership. I think was it 44 days or something like that. But we can see, what happened then. Once she'd gone, well, price started to drift back a little bit. So that is a kind of little quick, interesting history point, because where we are is, of course, we have traded back through that over the last 2 years since the Labour government and the premiership of Starmer Reeves. And what we find ourselves at here is up at the kind of 5% area. And I said a little bit earlier, that sterling's in a strange place because there was weakness, but not as much weakness as they thought there would be, because Starmer has said he's not resigning, certainly today in this hour he's not resigning. And as I said earlier, people are more worried about who comes after the Starmer and Reeva clown show, and that's what's worried about. What I am interested in is here on the weekly chart. Look at this. I see this at the 5%. I see this as actually as a double top here. I also see this second leg here. That to me is, that's a bearish engulfing candle. It's actually also a bearish key reversal candle, because we pushed to new highs, but rolled over last week and closed beneath the low of the previous candle. That's kind of a double top. There's a confluence of events going on there. Okay, and a lot of them have been expecting to sort of see the yields drift down off the back of an invigorating and inspiring 30th reset speech by Starmer. But as you can see from today, that has not been the case, and actually prices pushing its way up here. Where are we? Up 1.3% today. Okay, that's how markets are initially interpreting Starmer's insipid speech. So I'm watching this for all sorts of reasons. Okay, one, because I live in the UK. Two, I'm fascinated how this impacts GBP, but also just naturally a kind of interest in politics and economics and how it works out. Okay, my mentor told me many, many, many years ago that when there is a battle between politics and economics, politics wins the day and then economics wreaks its revenge. And I think this is what's happening here personally. So the government are making lots of presentations, lots of promises, but actually, the markets know that they have neither the clout nor the competence to be able to deliver on it, and that's what we're seeing here. And I'm curious to see, is 5% going to stay as a hard level, or or are we going to push higher from there? Okay, so it's we're at an inflection point. Okay, where I think a decision will be made.